BPCL reported their numbers and the stock has surged close to about 4%. Sonal joins in with the details. Sonal, prima facie, the numbers looked a little lower than consensus.
But it has been a refining beat if you look at the internals, and the numbers are not as bad as HPCL, so maybe the street is taking some positive cues from that. Just let me take you through the numbers first up. Revenues have come in at 1.15 lakh crore rupees. The EBITDA is lower on a sequential basis, but that was expected, and it is also lower than what the street was working with by around 600 crore rupees. Margins have come in at 5.4% versus an estimate of 6.5%. Net profit has come in at 3,397 crore rupees, which compares with a poll of 3,677 crore rupees, so around a 300 crore rupee miss there as well. But as I said, it is not as bad after the performance that we saw with HPCL. And if we look at the internals as well, the calculated GRMs have come in at $13.3 per barrel, which compares with a poll of $11.7 per barrel, so that is on the higher side. The refining throughput is higher at 9.86 million metric tons. Their marketing sales are higher at 12.92 million metric per ton. So the internals are looking better versus the reported numbers, and that's why the stock is higher. ICICI Securities has put out their first cut where they say the blended retail margin for petrol and diesel was a profit of 2.8 rupees per litre in Q3. The marketing margins, however, have declined on a quarter-on-quarter basis, so that miss has come in on the marketing side for the company in the reported figures. Now, let's do a peer comparison, because now all the three oil marketing companies have reported numbers. So HPCL is at the lowest with GRMs of around $8.5 per barrel, IOC at $13.5 per barrel, and we have BPCL at $13.3 per barrel. So it's definitely BPCL and IOCL which have done well in a weak refining scenario. Just talking about HPCL as well, because brokerages have written about it today. Jeffrey says they are maintaining underperform here because of unfavorable risk reward. They have an underperform call on the stock. Motilal Oswal, however, has upgraded the stock. They say miss on EBITDA due to lower than expected marketing margins, and marketing continues to be the issue for all the oil marketing companies. Nomura says that rising refining spreads means room for price cuts has fallen sharply. So now in the election year, all eyes will be on fuel pricing going ahead. But that's the report card for all the three oil marketing companies in Q3.
Interesting. Thank you very much for that. Dipan, you want to weigh in?